Good afternoon and welcome to this very special show in which we will attempt to analyse just what Rishi Sunak and his spring 2021 budget has in store for the construction and demolition industries. Joining me to pick over the bones of the Chancellor's pronouncements will be my good friend and co-host Peter Haddock of Content with Media. If technology allows, we also have a number of guests waiting in our green room as well. We'll be bringing those on as we go along. But before we get to them, let's just take a very quick look at some of the highlights from the Chancellor's presentation today. The furlough scheme has been extended until the end of September, which I'm sure will be positive news for a good few people. Furloughed employees will receive 80% of their wages, much as they are now, but businesses will be asked to contribute to their wages from the end of July as the recovery gathers pace. Self-employed workers will be able to claim a fourth grant from the Self-Employed Income Support Scheme worth 80% of 3 months trading profits up to £7,500. The newly self-employed in the 2019-2020 financial year will now also be available to receive the payments. A fifth grant will be made available as well. The Treasury has also confirmed extra funding for apprenticeships with a cash incentive to take on apprentices boosted by £1,000 to £3,000 per hire, which is fantastic news. The Chancellor has unveiled a mortgage guarantee scheme to help home buyers purchase property with small deposits. Under the scheme, the government will offer lenders a guarantee incentivising them to boost the number of riskier 95% mortgages. The Chancellor also announced a 3-month extension to the stamp duty holiday for properties under £500,000. The holiday for properties worth less than £250,000 will apply until the end of September. Looking over at the infrastructure sector, the UK Infrastructure Bank has been given £12 billion of capital and £10 billion of government guarantees to help drive an investment boom. Almost £400 million will be invested alongside the private sector in high growth startups. The Treasury has set aside an extra £1.7 billion to aid vaccine rollout, and the UK will launch a green savings bond aimed at retail investors to help raise money to drive the transition to net carbon zero emissions, which is positive news environmentally. Businesses will be able to access a new recovery loan scheme to replace the bounce back and coronavirus loan schemes. Just reading through my notes here, the Chancellor has also unveiled a £5 billion restart grant scheme that will provide COVID-hit firms up to £18,000 to boost their survival chances. The cash injection will be aimed at retail, hospitality and accommodation, leisure, but obviously that could potentially have a knock-on effect for the construction sector. The reaction from the industry itself has been suitably positive. One of the people we will quote here is actually waiting in the green room, but we'll go through these very quickly. That's what Ian McKenzie at the Guild of Property Professionals had to say. A shot in the arm, he says. Rob Oliver of the CEA, who is lurking in the wings as we speak, has also welcomed the super deduction, which I'm sure he can explain more about. I've got to be honest, this is the closest I've ever watched a budget speech, and most of it made no sense to me whatsoever, which is why I'm very pleased that I've got some friends to call upon to explain some of it. The final one of the positive is from the CITB, Steve Radley there. Obviously, very interested in the fact that apprenticeships is going to get a shot in the arm. Let's take that off the screen. As with all these things, though, not everyone was entirely happy. Brian Berry, the CEO of the Federation of Master Builders, believes that Rishi Sunak has missed an opportunity in today's budget to show global leadership with a long-term plan to make our homes greener, healthier, and more affordable to run. To discuss that and everything else that Rishi Sunak had to say, I'm joined, as ever, by my colleague, Peter Haddock. I'm going to put you on the same size as me because I don't want to take the lead on this. Good afternoon, Peter. I'm trusting you've watched the budget and you now know everything there is to know about it.
Well, you see, the thing is, Mark, the budget itself, you know, there was a lot of things that were sort of pre-announced and things like that. But people, quite frankly, like myself, you know, I'm a small business owner like you are. We're a little bit worried about how everything is going to be paid for, and you know, there is lots of rumors out there about taxation coming in a lot quicker, and there's a lot of people thinking quite nervously today, you know, what's going to happen. There's a lot of people, obviously, that are self-employed as well, that have been missed out. This sort of gap of people. But you know, I think the encouraging things that I got from this is that for the construction industry, this is a really big moment, because you know, we have worked tirelessly as a sector through the pandemic. You've seen that in the early doors, that there's a lot of roadworks that have been done. I spoke to a company that were literally on airport runways saying, actually, with all of the planes not there, they've done work that's going to protect the integrity of those runways for decades. You know, so all of these things that have gone on behind the scenes, what we didn't want was a sort of halt moment, or was you know, am I scared to put the money in and invest? And I think, you know, for me, the construction sector has had a big boost, and there's probably quite a few people that are relieved to hear about what's going on. And I don't want to steal Rob Oliver's thunder, but you know, he's already highlighted a few things, and I think we should get to him so we can understand what those elements are, and the super talk that's out there, Rob Oliver. So I'm going to hand over to you, because you have put a statement out there already, and people can see that statement on the Construction Equipment Association's website. Well, they want to pass that on. So, hello.
Yeah, you're cutting out a little bit there, Peter, but I think we were looking for something super today. We got it with the so-called super deduction. I thought that the picture you were using of the Chancellor there, he looked a little bit imposing and not someone you want to pick a fight with. And I think after today, we're not going to pick that fight just yet. The super deduction thing is basically a supercharged capital allowance. So that for every pound that someone puts into capital equipment or investment, they'll effectively get a tax allowance of 130 on that, so 30% on top of what they spent. So that's interesting, because it's the first time it's ever been done across the board. There've been some schemes in the past where you've had 100% capital allowances, but that's only lasted for a certain period. So where I see the opportunity for my members in the Construction Equipment Association is that any of the plant hire companies or the contractors that have been wondering about their future investments and maybe sort of dithering over a decision whilst we have the COVID shadow over us, I think that's probably going to tip them over into wanting to invest, because this is a limited period tax concession. So I think it's only going to last for a year or two. The quid pro quo, of course, is that in a couple of years, corporation tax is going to be hiked. So those larger companies that are making profits are going to be hit with a 25% corporation tax bill, which is the highest I can remember in my lifetime. And but at least by giving the stimulus now with the new allowance, it gives companies not an opportunity to start to renew their fleet, but to renew their fleet with the up-to-date equipment, the greener equipment, in line with what the government wants us to do in terms of lowering emissions and environmental impact, and to improve the efficiency of our construction sites. So I wasn't expecting this announcement, but when it came, I was really very pleased about that.
Yeah, and Rob, I think that one thing for me is that maybe this will accelerate, just as COVID has accelerated the adoption of technologies and data and things like that. I'm hoping that this will actually accelerate those purchasing decisions so that we can purchase the very latest equipment, but actually with the latest technology on it, using the latest data-enabled things, and also, you know, taking full advantage of shouting about it with the CSAR emission stickers that I know you guys are working on, that says, look, this is a brand new stage 5 piece of equipment. So that's all going to help, isn't it?
Yeah, very much so, and as we've discussed before, I know it's not about just making verbal commitments to be more environmentally friendly in the way we run our businesses and more sustainable or whatever. But you've got to measure it, so that's where our ECB scheme comes in handy for construction sites, and we're working closely with HS2 on that. But also to measure it is the first stage of then improving things, and there's more and more good technology, good machines, latest innovations coming on in the market. We haven't, my members haven't stopped designing new machines just because of COVID, and we're just looking at this now as a leg up to get that adoption supercharged.
Yes, indeed, Rob. And I think the other thing about this, Rob, is you might be able to supercharge that investment. But what we do need to supercharge, and we always keep talking about that, and it was only a couple of weeks ago, National Apprentice Week, is the people to operate this equipment. And so having the confidence to bring people in there with the apprenticeship sort of double to £3,000 with this Help to Grow initiative, and the grants and things like that. It's really important, isn't it? And actually something we haven't mentioned at the moment is for business owners, there is this new scheme that is sort of the MBA per se of the industry that's going to allow people to just pay 10% of the cost to upskill themselves. And really upskilling is what we need if we're going to take advantage of all this new equipment, because we need apprentices, need operators, need people to be upskilled as well and how to run their business in a digital world, don't we?
Yeah, that's right. And I do remember when we wrote to the Chancellor last year, I'm not claiming credit for this, because a lot of people were saying it. I was looking for some activity around capital allowances and also more work around apprenticeships and encouraging companies to take a plunge with new apprentices, because one of the saddest things of last year because of COVID was a lot of companies just put their apprenticeship schemes in terms of recruitment into cold storage. So hopefully this will heat them up a little bit now to take things forward. And the ability to upskill with this new executive training scheme, which I'm interested to see the details of that. That's exactly what we need, I think, in certain sectors of our construction industry. So yeah, it's good. It's hit some good hot buttons.
Thanks very much for coming on, Rob, and giving us that initial big super impact of the budget there. Really appreciate that, and also appreciate you whipping around the comments so quickly to get out there so that the industry can see those that were, like I said, put out by the CEA earlier today. Very, very quick response, Rob. Thanks very much for your time.
Right, thanks for the opportunity.
No worries.
Good to see you, Rob. Yeah, I mean, one of the things that I was watching for, and I'm going to get somebody who's far more expert at this on in a second, Neil Edwards at the Builders Conference. Obviously, we've had some very, very big months in terms of construction contract awards. I think it was 12 billion in December. I think it was 6 billion in January, and then it was 8 billion last month. And my big concern was that we could hit a bit of a full stop on that if the Chancellor had made the wrong decisions on a few bits and pieces. Let's get Neil onto the show to see what he made of the Chancellor's speech.
Hi, Neil.
Hello. Good afternoon,
Neil.
Good afternoon, Mark.
So are you celebrating, are you commiserating, or are you somewhere between the two?
Well, I'm definitely not commiserating. I think it was a very positive budget, really. It wasn't so much for the personal side of things. So the pound in your pocket is still going to be a pound. You're not going to gain any money from that. But what I did find that it's given the opportunity for businesses to plan for the future, and I think it's all positive in that side of things, especially with, I'll pick on the Freeport side of things. The last big announcements right at the end where he's come across with 8 Freeports. Now, obviously, the devil will be in the detail within that. But when you're considering, I think I've written them down here, those areas are across the UK. It's East Midlands Airport, I think, and around that area. Felixstowe, Humber, Liverpool, Plymouth, Solent, Thames and Teesside. The money is spread out, and we speak quite regularly, Mark, that London is the construction industry is very London centric, and this will give the opportunity of spreading the workload across the UK. And then we can look forward to other things like HS2, 2A, and also other major infrastructure projects. There was none of those actually mentioned in the budget. And he didn't go over old stuff. Sometimes a lot of governments go over old stuff, and don't forget our 40 hospitals that were coming online, and et cetera, et cetera. None of that was in there. It was all real news. So I was very positive.
Yeah, I mean, certainly part of the theme of Rishi Sunak's speech was he referred to the generous way that the government has responded to COVID, and he did that quite a bit. And I was kind of expecting that to lead into something on new hospital builds, because obviously we've been waiting for those. COVID has obviously changed the landscape as far as hospitals are concerned, because the hospitals we need today are not the hospitals we needed 12 months ago before COVID hit. But you'd have to think that needs to be waiting in the wings long before a general election, don't you?
Definitely. I think it was in their manifesto. So there's going to be hopefully a little bit of call to account with some as we go forward from here, to make sure that what was put in that manifesto, what is that now? Just over a year ago, that they actually deliver on it. And so they're kept to account. But yeah, generally, the other thing that came across, obviously, with the stamp duty holiday up to the end of, June now, that also will help construction or move construction a little bit further forward. But we are still, as we speak as well, Mark, lagging behind on the number of units per year that we need to do. And I think one of his catchphrases that he came out with was, wasn't it, something like, we want to be a land of people that own rather than rent, something like that. I can remember. Once again, positive news for the construction sector, really, and also mortgages as well. He's looking at helping people that can't find the 10% deposit go down to 5%. So
yeah, that had, certainly as far as I'm concerned, and I realise I'm an old stager these days, but that really had echoes of Margaret Thatcher and her buy your council house. It was very much trying to push people into ownership, which, as we know, that will filter down into house building, which is already flying high, and could probably do with flying just a little bit higher.
Yeah, definitely. There was a research done a few years ago, but what also was about for every £1.64 that is spent in the construction industry, for every pound that is spent in the construction industry, £1.64 goes back to the economy. So I wonder if that's been taken into account there, because if we're spending all this money on the construction side of things, and whether it be new plant, etc. But Peter brought a fantastic point up. Who is, and we spoke about it on Monday, who is going to do this work? Because we need to start going into schools, and as I say on Monday, we don't need to get them at 14, 15. We need to get them at 12, 11, something like that, to say that construction is a worthwhile and very good industry to work in. Think about it, at least think about it, because teachers and universities are still saying that we're more in the digital world. Yes, we can use digital, but we still got to, as somebody's got to drive the plant, unless we have huge input and huge investment into digitization of machinery, which I don't think is going to happen in the near future.
No, I mean, I'm sure Peter's got something to say about that, but it just strikes you, when you think about that, potentially an 11-year-old now could end up working on the HS2 project, and certainly the HS2 Part 2 project.
Well, Neil, you'll be very pleased to know that, I've got a 13-year-old son that's doing that work for me, because he's basically out there talking to people and saying in his classroom, look, this is a great industry. I have a text message from one of his friends who is actually 18, who's just text messaged me earlier today and said, Lucas has spoken to me and shown me some of the videos that you've been doing. I'm interested in finding out more about being a plant operator. Well, I'm going to go straight out and get information for that young person, because they've been influenced by my 13-year-old son. And that's the kind of change and dramatic change we need. It's no good grey-haired people like myself going, oh, it's a great industry, da, 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 da. We need people that are young, that are enthusiastic, that are actually, native social media and YouTube users to do that job for us as well. But we need to give them the investment and encouragement to do that, and then we need to protect them against the trolls and people that might have a go at them because they just feel that they've got to have a go at somebody, And so there's a big ecosystem that needs to be pushed on. It's been done in all other sectors in the world, that are pushing out a lot of this material, but the construction sector seems to be very reluctant. And obviously we've got health and safety issues and things like that, but we haven't got this national body that is really pushing on construction and bringing people in to the industry. And everybody still thinks you'll be stood out in the rain laying bricks, which is just not the case.
No, and I do think we've kind of missed an opportunity when you think about the number of people that are working in like hospitality and leisure that have basically been twiddling their thumbs for the best part of the year, possibly struggling to get by on 80% of their usual wage, and yet here in construction it's been full steam ahead, and everyone's just knuckled down and got on with the job and have been earning proper money as they normally do.
Yeah,
Absolutely.
and I just refer back to our National Apprentice Week special show, Mark, and we had interviews there with a hairdresser called Chloe who had basically come in to be a plant operator for Lynch. We then had an interview with Jessica, who had basically come in from training to be a police officer to come into plant. And then unfortunately we had an interview with Ryan. I wasn't saying it was going to be unfortunate, but he actually had his tickets but couldn't get a job. Now this that means that the system is broken. But there are people out there like Flannery Plant Hire, like Plant Force, like Lynch, that are all investing in skills hubs, and there is a huge amount of money being poured into it. But you can build it. Will they come? No, they won't, unless we shout about it. So that's great, Neil. Appreciate that.
Yeah, it's an interesting point you make there, Peter. I was watching Twitter this morning, and Craig Spillard at Spillard, the safety system company, was bemoaning the fact that he had been advertising 2 jobs, one in the north, one in the south of England, obviously allied to the construction industry. And the job has been out there for about 6 weeks. He hasn't had a single applicant for either of them.
Yeah,
and yet you've got people, obviously we've got a lot of people. I think the Chancellor mentioned the fact that we've got an additional 700,000 people unemployed at the moment. Obviously we've got a lot of people on furlough, and yet he can't get a single applicant for either of those jobs working for a tech company, effectively. Yes, they're allied to construction, but they are very much a tech company. Something's gone wrong there, hasn't it?
Yeah, and I think this is part of the conversation where it'd be a great moment to bring in Chris from the CPA, Mark, because if anybody's doing anything to raise awareness of plant operators, it's the CPA stars of the future, because that's what they've been doing for a number of years, and certainly that's something that we need to push out more in the industry as well.
Absolutely. Well, Neil, I'm going to let you get back to your day job. Thank you for dressing so smartly. I do appreciate it. I don't know what we did to deserve that, but thank you very much. Keep our fingers crossed that Rishi Sunak's announcements today echo through to our discussions at the beginning of next month, and hopefully we'll have another big month.
Well, just to say that we're already above £1 billion of contract awards this month already, so it's good news.
And where are we? The 3rd, the 4th, something like that?
That's correct, yeah.
Fantastic. Well, long may it continue. Neil, you get back to your afternoon, and thanks for joining us.
Thank you very much indeed.
Thanks very much, and I'll be calling you to talk about all this on my podcast, so expect a call in the next week or so. Okay, mate?
Okay, Peter. Okay, speak to you soon. Cheers, bye.
Right. I've got what we refer to in the trade as the beach ball of death here at this end. I don't know quite what's gone wrong there, but I'm going to try and take Neil out. And I think we've got Chris has joined us. Good afternoon, Chris. I know Peter's got some questions that are lined up for you. So, Peter, you take it away.
Well,
excellent.
Chris,
afternoon, gents.
You're right.
Not too bad.
Yeah, good. Chris, we sort of ended that last one with bringing new people into the industry. I don't want to dwell on it too much, but I do want to say how impactful the CPA Stars of the Future is, and how important the CPA is in driving talent into the industry. That's one of the critical things you're doing, isn't it?
It is, yes. I mean, it's one of those areas which we, as a trade association, obviously recognise the importance of attracting people into the industry. Stars of the Future is growing year on year. We're already obviously planning planning for this year's event. But I think it's important as well to sort of recognise the fact that the industry is evolving, the industry is changing, and we talk around digitisation, we talk around modern methods of construction, that kind of thing. That was an area actually highlighted by the Chancellor in his in the budget, in the budget papers. You know, the industry doesn't stand still. So organisations such as ourselves, it's really important we get out there, we get the message about what working in construction plant means, and obviously all the different roles that are out there. So no, the work goes on continuously.
Now, you know, Chris, we spoke obviously before we're doing the show as well, and one of the things that was a great big hold on, I've listened to it, it's not there, is the big issue that your members and the industry is facing, and that is something that wasn't mentioned, and that's the rebate on red diesel, and you know, it's due to be removed. What's happening there? You know, that's a big issue, isn't it?
Yeah. It's obviously one of the issues. It was highlighted in budget last year. It came out. I think we knew at the time when they announced it last year, they'd already consulted on it, I think about 18 months before that. So on one hand, it wasn't a massive surprise. Obviously, the government, they're looking to enhance their green credentials alongside the budget papers, which came out just after Sunak had finished speaking. They have actually now published their full response to the red diesel consultation, and the red diesel, the rebate for construction, will remain. It will still be removed from April next year. That does remain the case. So basically, really, that's not a massive surprise from our side. The news, as Rob said, around the super deduction allowance, that's interesting. That's something which I think very much is interested from our members' side of things when it comes to, okay, how does this apply? What does this mean? But certainly, yeah, with red diesel, we continue to talk to the Treasury. Hopefully, we'll be speaking with them very soon about what the next steps are. But no, the rebate will be removed from next year. I thought the interesting thing that did come out of the budget was around fuel duty. Now, fuel duty isn't rising this year. Watch out for it next year, because that may well be the case that we see that. But let's see how the economy goes for the moment. But no, red diesel, the rebate is being removed, and that was confirmed today.
Well, you know, that's one that they weren't wanting to highlight to us, Chris, in the budget. So we're trying to avoid bad news today. But you know, what's interesting there, Chris, is obviously I hosted the Volvo construction equipment and SMTGB introduction of the electric wheel loader recently. It's only a couple of weeks ago, and that really is one of those things that is going to bridge that gap, the sort of technology gap towards making alternative fuels like electric and hydrogen. I talk about them on my podcast and stuff like that. So, you know, there's an opportunity here from a capital perspective to invest in those products and the ancillary products that, you know, maybe the portable wind turbines, solar panels, you know, hybridization of diesel generators to power these things, as well as sites. But what are your thoughts on that sort of area, really, and how that sort of investment allowance will play a part?
I think it's important that you know, the industry is committed to lowering emissions anyway. We've made no bones about that at all. You know, the industry over the last 25 years has lowered its emissions through the various clean regulations brought in at national and EU level. I think at the moment, the concern that certainly when we surveyed members during the summer is there is a slight technology gap between machines that use red diesel and the ones that are coming on stream. So as you say, there's a lot of work that's gone on around hybrid engines, a lot of the work around electric engines. All of that is coming, and certainly the Treasury have spoken about that when we've been speaking about them. But it's just making sure that we overcome the gap that exists, that if the rebate is removed and companies, you know, pay for effectively white diesel when it comes in next year, it's making sure that they still have the ability to invest into the new technology as it comes on stream. I've been working with BEIS on numerous things when it comes to the Department of Business around looking at innovations in new technologies in NRMM. They're working on that and they're looking at it, which is interesting. But it's still, we need a bit more detail around how this is going to work and what it looks like. That's the important thing, and I think certainly that's what members will be expecting over the next few months as we move forwards.
Yeah, yeah, and I think you're right there, Chris. And I think what's interesting as well, though, Chris, and we haven't really touched on it, but I think is really important to the members, is yes, we have my favourite project, HS2, I like to talk about, and so there's a lot of people on HS2. But this creation of the National Infrastructure Bank, that's a good move. You know, that's a good move, and also it you know, releases more funding. We're talking about the actual location of it is not in London. Wow, you know, that in itself is giving it a holistic approach as to what it's going to be doing. And there still is, you know, a lot of infrastructure needed, let alone the internet connections and stuff that we need to talk like we're doing now. So what are your thoughts on the infrastructure bank and probably maybe how it could support, you know, more of the SME community within your within the sector and your members?
I think the devil ultimately is in the detail around how it will apply. Now it comes into force. I think it's next month. They're actually talking about it, and they had announced it back in the autumn statement. So they're following up on that. It really does come down to how important how the actual infrastructure bank understands the industry and understands how the plant hire industry, for example, works. You know, it's got a fantastic. We've carried on through the pandemic. You know, we've been able to work through the through the crisis and whatnot. So we've got a great track record, and also a lot of the work, obviously, as you say, around HS2, around Highways England. We hear about Build Back Better. We hear about how the government are looking to obviously construction to drive the economic revival. That's all really, really important. But I think it comes down to usability. It comes down to the culture. It comes down to making sure that companies can access the funding that they need. If they can do that, then absolutely fine. That's great. I think infrastructure bank, it's a really good idea. Let's hope it does what it says on the tin, for want of a better expression. So yeah, top marks for that. But let's see how it's applied and what the user experience is like.
Yeah, indeed, Chris. And I think, you know, for me, there's a lot more to talk about in this subject, but I know we've got some other guests that would like to bring on. And for me, it's a great point to talk about a national infrastructure bank, which leads us on to how are people going to make, and your members, going to make that shift between getting older equipment and reducing emissions and using this new super ability to deduct from their taxation, but handing over to a regular live show contributor, Rupert Craven from Ritchie Brothers. So, Chris, thanks very much for coming on the show. Really appreciate that. And I'd love to be able to, again, both myself and Mark touch base with you again when we see more of this detail, because really, fuel and the red diesel subject is something that we definitely want to talk about and make available. Thank you very much, Chris.
Cheers, guys. Thank you.
Cheers,
Take
Chris.
care.
Good afternoon, Rupert.
Hi, Rupert.
Good afternoon. How are you both? Good to be here.
Feeling remarkably chipper, thanks to Mr. Sunak. I have to say, there was a little bit of me that was concerned that he was just going to say, we've got to pay for COVID now, in which case all bets would have been off for this show, I think. But no, I'm feeling fairly warm and fuzzy about the world. How about you?
Yeah, likewise. No, I think just thinking back to a year ago, we were sort of having our second auction of the year in 2020, and then COVID all kicked off. What with how we're getting back on with the vaccines, Brexit working out well. Now we've got this. This great budget's gone from there. For me, sort of three really key areas that have been discussed about, you know, is firstly that super deduction. I think that's huge. You know, it really is. It's 2 years of putting a lot of money into new machinery, which for us is great because that will push out old machinery. We've got the free ports. That's very interesting for us. Our main auction site and where we moved to first when we left America and Canada to set up in Europe was in Rotterdam, and that was all about the free port. Plus, we've got a site in Dubai. Again, free ports, I really think, generate a lot of business from there. So good to see them going around that. So some really interesting additions to the budget that I think will help our industry a lot.
So Rupert, you know, for me, one of the things about this super deduction is having the cash to take advantage of it and actually being able to understand the decision-making processes. Because what I'm seeing is, you know, look, I'm no investor, I don't manage a plant hire company, but it really strikes me that actually I can look at the 2 years, I've got this period to actually invest and get a huge amount back. And so, you know, that'd be a time when I might look at going, hey, maybe I don't want to keep some of this equipment for the 3, 4, 5 years. Maybe I want to keep it for the 2 or 3 years and trade that out when I can get a decent price for it, and then reinvest and get, you know, the advantage of this sort of super deduction. And so, you know, do you think that will mean that more newer, younger equipment might come onto the marketplace, or, you know, people might look towards data to say, you know, what's the value of my assets right now?
Yeah, I think definitely, you know, any help from that. So I think it's also a good way to offset the increase in the corporation tax. You know, that's still well below some of the, you know, main markets in Europe and the US. So we're in a good position there, but they're saying 25 billion in tax deduction, tax offset in that deductions that they can do. So I think that's really big, and that will encourage people. I know that they're going to invest in new machinery, whether that was there or not. You know, we've got a massive lack of new machines coming into the UK, huge demand. Everybody's wanting to grow their fleets. There's lots of business to be had with them. So I think that will just increase the situation. And if people are investing, it's a great way to get the tax back.
And of course, for then, you know, the buyers, if we are going to get these sort of younger pieces of equipment coming onto the market, they are, you know, going to be quite desirable for people that are on quite large projects. You know, obviously HS2s and stuff are, you know, are saying brand new, but, you know, there's heavy demand out there, isn't there, at the moment?
There is, but you've got to remember most of the machinery that's sold in the UK as a used equipment market goes out of the country. You know, that is easily 70-80% of the machines that are sold each year used go out of the country. That is, I think, is why we keep up our new machine retail so high. 24,000 units in construction sold last year, and that was 25% down on the previous year. So we should be really around 30,000 units bump a year, maybe getting up to 35,000 and ahead of that with what's coming up in the next couple of years. But I think that's the key why we have such a high number of retails for the size of the country, is because a lot of that machinery goes back out of the country as soon as it's sold, and that for our business is a big flow through of machines going through the auctions, going through the dealers and everywhere like that, because they're not here for the second, third and fourth life. Their extra lives are out of the UK. So that all fits in with the free ports, with the new machines coming through, with the old machines going out. Everything that we can go on there just helps that turning. And I think also most of our companies, our people who are running the businesses and the people who are actually operating machines are wanting the newer machines, and they're not really looking to sit in old machines. I think our expectations in the UK are pretty high. Look at the cars and look at everything else we sit in.
Yeah, I think you're right there, Rupert.
Yeah.
And what is interesting, Rupert, is you haven't even finished Maltby now, and you're talking to me about free ports. Surely you're not going to be moving to one of these free ports. You've only just done up Maltby. Well, in fact, you've still got a bit of work to do on the site, haven't you?
Well, they did say 8 free ports, but I think we can lobby for a 9th at Maltby.
Very good. Certainly going to be good to get back on the site there. I've been doing an awful lot of work in the lockdown. But Rupert, that's great, you know, to get that sort of interest.
Good positive outcome, and I think in a safe set of hands with the government at the moment.
Cheers, Rupert. That's brilliant.
Bye-bye.
So, Mark, I think, you know, for me, I actually happened to be with a British manufacturer this morning who have basically, I call them the Formula One of the attachment industry. So, because they invest in equipment that the Formula One racing car makers use to make Formula One cars. So without further ado, Mark, Marcus Clay from Digbits. We've just been with him this morning. And
yeah, good to see you again.
Thanks, Marcus.
I owe you a huge apology, Marcus, because judging by the screen I'm looking at, you were actually first in the room and you're the last to get to speak. So my apologies for keeping you waiting.
So, but Marcus, some of the things we were talking about this morning, and I was with you this morning, but left before the budget arose, was really about you as a high-end sort of attachment manufacturer in the UK, and how, you know, some of the budget elements would support your business in a couple of different ways, which is one, allowing you to invest in even more really high-tech laser robotics and all the rest of it that you've got there, but also how investment, loosening up investment would help you to sell more products into the marketplace. So tell me, what are your thoughts as a business owner? And it's your 30th year this year, so you've been around the block for a while. What are your thoughts on the budget and what it will do for you guys right now?
Well, it is our 30th year. We've only been a manufacturer for a relatively short part of that, but wearing the manufacturer's hat, the ability for us to get that 130% allowance on capital equipment is really useful. So that straight away helps us. It would be hopefully good to see it run out a bit further than just the 2 years, but everywhere else in the world that this type of stimulus has been tried in a developed economy, it's worked. You know, it's delivered results. It's encouraging investment. We see our customers also being able to benefit from this greatly, because capital equipment, whether that's excavators or excavator buckets and attachments, is something they can invest in using this super deduction. And really, it's just the humble, good old annual investment allowance that's been rebranded and supercharged to be beyond the 100% and to be up to, I understand, £1 million limit for the next couple of years. But we see that as feeding through into the industry well. We see it benefiting us, and we think hopefully that if the government see that it's paying back, they may well treat this as a longer term stimulus to boost up productivity, because in basic terms, one of the most important things you can do to boost up productivity is to give is to provide investment in machinery. If you put an operative on site and give them a shovel to dig with, they can't do a great deal. If you give them a mini digger, they can do quite a bit more. If you give them a 20-ton excavator, they can do a huge amount more. And really, that's all just down to the investment, and the allowance that this super deduction gives just helps ease the cash flow and gives some tax incentives, but it does help ease that tax flow.
And Marcus, I think, you know, one of the things we haven't really talked about is the sort of greenification, if you want to say, of construction projects. And I know some of the things you make are bespoke for jobs, but also, you know, you've got your range, but you use different types of materials that are less heavy. So, for example, you know, when you're putting an attachment on an excavator and you're digging with a heavier bucket, you're just burning fuel, aren't you? So there's a lot of the focus here, which can be in investing in greener solutions. And it's not just the equipment, it's what you put on the end of it, isn't it? So explain that to us.
Yeah, absolutely. I mean, we produce an array of attachments, a lot of which are custom made to our customers' requirements. And one of the things that we're very keen to look at is trying to sort of combine high wear, high strength steels, which also allow you to use a lighter gauge of steel. And in that way, the bucket or the attachment that you're swinging about on the end of the machine, if you like, the dead weight, is less. So you've got more payload and you are spending less time swinging a heavy attachment around, so you can use less fuel. So I think investment in attachments is something that can bring environmental benefits. And I think obviously customers are going to have to be investing in machinery over the coming years to green up their fleet. So hybrid excavators and all of these other technologies that are coming out, and even fully electric excavators on the smaller end of the plant spectrum. All of these are things that require people to upgrade their fleet, so they've got to invest. And I think that's where a lot of the environmental benefits are going to come in as this this allowance scheme, as this super deduction scheme pans out.
And yeah, I think you're right there, Marcus. And I think the other thing for me is you're a small business, but you've just hired 2 people, you know, which is a relatively high percentage of your workforce. And so, you know, again, you've got this the new apprenticeship elements and help to grow initiative there, and that is going to be really important, isn't it, for your customers and perhaps even yourself as you look to grow and bring more people into the industry, isn't it?
Completely. I mean, it's the general need in business for skills is huge, and I think anything that you can do to make the ties between business and education closer is a good thing, because as has been already mentioned on here, hooking people into a career in the construction industry when they're younger is vital if you're going to get enough people with the right skills. So yeah, we see that as a fundamental part moving forwards. It's a fundamental part of, again, raising productivity, having the right skills. Certainly we've got people here who, unfortunately, due to COVID, haven't been able to receive the training that they were going to receive in the last 12 months. As soon as they're able, we've got people who are going to be trained up, and so we're very much into providing the employees with the skills. But yeah, we're looking at the future and apprenticeships and things like that, giving us the ability to get the right skills in place moving forward.
Well, that's brilliant, Marcus, and thanks for sort of coming on today to talk at it from a perspective of one of those businesses that really is supporting the construction plant sector by innovating and making sure products are there, and certainly seeing all of the equipment you've purchased and the plans to Formula One up even more in the future. This morning it was fantastic, and look out, folks, for some reports on my Digbits adventure coming into my social media platforms. And thanks for coming on, Marcus. I think it's really useful to see how this impacts the supply chain and the suppliers to the industry. Thanks very much.
That's great.
Just before you go, Marcus, I don't know whether this is because our conversation is so sparkling or because they've got nothing better to do, but 3 of our previous guests are still lurking in the back room, and I'm not going to hopefully not going to shock them too much by bringing them back in. Really, I mean, obviously you were responding to my questions and to Peter's questions, but I just wondered if there was anything else that you'd like to add, anyone, before we draw a halt to this. One of the things that strikes me about this is Peter and I can talk about for an hour and a half on a new digger, a major financial announcement, and we've managed to knock it off in 45 minutes. I'm not entirely sure how we've managed that, but if there's anything anybody else would like to mention, budget related or construction related, now is your chance.
I think it was important actually that the furlough scheme, the wider business scene has that continues to September. I think clearly what they've tried to do there, looking at the economy, is obviously have a bit of a safety bed to make sure that if anything happens with the vaccine rollout, if any new variants in the pandemic come along, they've still got that element of support. Because I think obviously everyone's wanting to normal starts on 21st of June, is the date when the government wants things to be back to as they were. But obviously I think they're still a bit cautious. So I think the wider economy, the mood music, business confidence, that kind of thing, they're trying to make sure that's in place in case anything happens over the summer. So that was actually quite interesting to see, because obviously that all features and goes through to construction. So yeah, that was good.
Business confidence, I think, is a key one. I mean, it's something that Neil Edwards and I touch on, in our monthly discussions about the state of the market. It really does have a ripple through, Neil, doesn't it? If we have some positive news, much as we did in the last couple of months, but certainly in December, £12 billion worth of new construction contract awards. That money leads to money, and if everyone's feeling positive, there's more money to be had, isn't there?
Yeah, exactly right. I think what needs to happen also, though, is those companies need to tell their operatives and their personnel through the business that things aren't as bad, because nothing spreads around more than sort of like negativity. It's got to be back down to some of the business leaders to sit down with focus groups inside their own companies to say, look, this is the plan, this is where we're doing, and give people that confidence of going forward. And with the other bits and pieces that are in place now, with loans, etc., we all should be feeling a lot more confidence, and that brings stability. Hopefully, 2022 will be the start of a very good year.
Yeah, fingers crossed. What surprises me is the fact that obviously we've been through one hell of a year that nobody could have predicted, and yet that positivity, it didn't really go away. I remember reporting back, Neil, quite some time ago, in the midst of the recession, sort of 2008, 2009, when monthly contract awards were down to £1 billion and sometimes even less than that, and yet we've hit a £4 billion base mark, and we've just not dropped below that. Come Brexit, come pandemic, come American elections that could have sent jitters through the market, and yet none of it has. We've just seemed to have soldiered on, and I think that says a lot about the resilience of the construction industry in this country, doesn't it?
It definitely does, and I'm glad of it. Really, I really am glad. You're right. When the financial crisis hit the UK and the world, we were down to sort of like just over £1.5 billion worth of work each month, and now we're most surprised if anything goes below 4 billion. And now for the last 6 months or so, it's been hitting 5 and 6 billion. And obviously last month was, well, in December was 12, January was 6, and last month was 8. So, and the number of projects that are coming through is still very high in the way where they're bidding for or being negotiated or whatever is still comparatively high. Well, we've had the last 2 months since the beginning of the year, over 2,000 projects that we've researched and added. So we are above our normal average. So that gives us confidence as well.
Yeah, I wouldn't want to overstate it, but one of the things that you and I discuss on a fairly regular basis is the fact that not all of that investment in construction, new office blocks, new warehousing, not all of that stems from the UK. A lot of it is coming in from overseas. And that kind of underlines the fact that, Brexit has had its issues and everything else, but it doesn't seem to have stemmed the flow of inward investment, does it?
No, definitely not.
I think, Mark, as well, what's one for Rob. Rob, rumor has it there are going to be some major deals, huge record-breaking deals for equipment to be announced in the coming weeks and months. What are your thoughts on that from your CEA perspective? Because it's going to be game-changing, isn't it?
Yeah, it's really interesting, Peter, because they're talking about statistics, and within our sector, the January figures of equipment sales were within 2% of what they were last January before the virus hit. And I had a note through just before this meeting, actually, where there's a prediction that the worldwide construction equipment sales will hit a record this year. Okay, now none of us know whether that's going to actually happen, but if people are starting to forecast that is very, very significant. And similarly, if the tide is turning now in the UK in terms of bigger investments in equipment and in different projects, then that's got to be good news. But one of the things I was going to mention, which the Chancellor just sort of skated over a little bit, he mentioned about the UK being a trading nation and depending on international trade and whatever. One of the things that we always say, something like 70% of what we manufacture in the UK finds overseas markets. And the frustration at the moment, of course, is the restrictions on travel and the restrictions on being able to keep in touch with those markets. And what we would like to see coming through this year is maybe a little bit more leadership from the Department of International Trade in helping us to facilitate trade with overseas markets. It's tough now because of the virus, but we've got to be really ready when travel restrictions and the restrictions come off. And I think they just need to do a little bit more on that.
Yeah, good point.
It's an interesting point. I don't know how much of your product goes to overseas markets, Marcus, but I take it you are an exporter.
We are, yeah. I mean, we obviously we have two businesses technically. We've got the principal business is Digbits. Then we've got the other business which was started in 2007, which is Bav Crushers Limited, which is focused on the crushing and recycling and screening attachments. That's historically always exported more. That was one of the reasons why the business was split out. But both businesses do export all over the world, and it's something that we're watching closely, because obviously ordinarily there would be things like Bauma that we might participate in, for example, which we have in the past with the help of the CEA. I agree with Rob, Oliver, that really we've got to be starting to plan a way forward with all of that, to see how we're going to promote the UK and our exports.
You can tell I've just pressed the wrong button, can't you?
Good one, Mark.
I don't know what happened there.
Oh, you've just got.
You could genuinely train a monkey to drive this, and yet I still can't do it. And I'm a year in. I don't know quite what's going on there.
Mark out. So obviously you've just exported Marcus from live.
Oh.
So I'm sure you're a large bucket.
There he is.
Yeah,
re-imported.
What you don't know is there's like two buttons here, and I've just pressed the wrong one. It's a 50-50 shot, and I've pressed the wrong one.
Can I get you a big Mark for it? But you could maybe put one of these stickers on it, Mark. But
I think what I need is a new pair of glasses. I think that probably help. Right, gentlemen, I think that will probably do us. We're almost at the hour mark. Unless anybody's got anything else they would like to add, I think we can probably call this one a wrap. Just let you have one final say. Anyone?
No, okay.
And silence came the stern reply. In that case, gentlemen, I'm going to let you all get back to your day jobs. Really appreciate you joining us today. Appreciate even more the fact that we're meeting on fairly cheerful circumstances. I'm going to go onto eBay now and take down the advert that I put up for my other kidney, because apparently I can afford to feed the family going forward, which is always good news. But in the meantime, gentlemen, I'm going to take you out one at a time. I will leave you, Peter, because I know you've got bits and pieces that you can tell other people. But Neil, thank you for joining us. Chris, thank you very much for joining us. We haven't met, but we will do one day, assuming people let me out of the house one of these days.
No worries. Cheers.
Rob, great to see you as always. And we actually made it all the way through without referring to you as Bob, which is always a benefit as well. And I've got the beach ball of death again, so it doesn't look like I can get Marcus out of the stream. In fact, it may even mean that my stream is frozen. But Peter, any final points from you?
I just think what's really great about this show and is our ability to actually bring these very, very connected and real world individuals into the show, Mark. It's great to hear those insights. It's great for those people to give us the time that they have today, because I know they're very, very busy. It's a very important day, particularly for the organisations like the CEA and CPA. But I think it's really important that we actually report on these things as they are happening, so that people can actually go away, look at the situation, find out more information and act upon it, so that they can actually get ahead and get in advanced talks to make the most of the things like the super deduction, and so it's great. And only other thing really to say, Mark, is it's a national, well, I've forgotten it, international, in fact, Women's Day on Monday. And I will be joining you again on Monday to again highlight a really important day in the calendar. We just did an epic show for National Apprentice Week, but I think following it up with International Women's Day is going to be important, because that's one of the things that I am, and I know you are, very passionate about, promoting diversity and inclusion in our sector, and I know it certainly needs a lot more of that. So join us again, folks, on the 8th of March.
Yeah, I mean, in actual fact, that's an ideal follow-on from this show, because the number of times we've touched on the fact that there's all this money about to be sloshing around. There's lots of work to be done. Somebody's got to do it, and the fact that we've for so long ignored 51% of the UK population makes no sense whatsoever. But we are making strides, and I'm hoping our guest list that time, it was all male today. It'll be all female next time, all things being equal, which means I can take a back seat and let somebody else take the highlights just for once. But in the meantime, everyone, thank you very much indeed for joining us. Really appreciate everyone's taken part. Peter, you've been a star as always. I know I can rely on you for these things. Have a great afternoon, everyone. I'll be back here again 10 a.m. tomorrow, doing our breakfast show with the latest industry news and views and gossip, as I always do. And until then, I'm going to let everybody get back to their day jobs, and I shall see you all very, very soon. All the best.
Thanks, Mark.